Good day, crypto trader. Bitcoin is an instant buy at these price zones. Bitcoin price reveals three important buy zones at $29,000, $19,500, and $12,000. Due to a bear flag formation and market inefficiencies, BTC could crash to $19,500 or lower. A weekly candlestick close above $52,000 will invalidate the bearish thesis for BTC. Bitcoin price has been stabilizing around a critical psychological level for almost a week now. While the recent downswing might already seem like a big drop, the macro outlook reveals that more selling off has yet to come. Bitcoin price to head into deep discount. Bitcoin price is hovering around the $30,000 level after crashing nearly 60% from its all-time high at $69,000. This downswing set a temporary bottom at $26,591 and also signaled a breakout from the bear flag setup. This continuation pattern forecasts a 52% downswing to $17,803, obtained by adding the flagpole's height to the breakout point at $37,660. Furthermore, the weekly chart attached below shows the volume profile for 2020, 2021, and 2022 with a visible range volume profile extending from 2019 to 2022. The volume point of control, POC, represents the price level where the most volume was traded and price is, therefore, more likely to face support and resistance. The recent downswing has crashed below the 2022 POC at $32,480, suggesting the downtrend has a lot of strength. But, perhaps, the most significant data is for the 2020 and 2021 profiles, which shows that there is a gap extending from $11,891 to $29,424. This void is a result of the market's exponential move when it closed the gap caused by market pricing inefficiencies. As Bitcoin price explores these inefficient areas, it will provide investors with an opportunity to accumulate BTC at a discount. The most critical buy levels include $29,000, $19,500, and $12,000. The ideal buy zone with the least risk and the possibility of a quick reversal would be anywhere between $19,500 to $12,000. While such a large downswing might seem extremely unnatural, a weekly candlestick close above $52,000 will mark a reversal. This would set up a higher high from a macro time frame and allow sidelined buyers to jump in. In such a case, BTC could continue moving higher and tag the $60,000 psychological level or set up a new all-time high at $80,000. Solana price forms a classic squeeze against $58.84 top level. Sol price will see a bullish breakout that will hit the red descending trend line. Depending on the motivation and deflation of tail risks, expect a break above the trend line toward $95.31. Solana, Sol, price is on the cusp of piercing through the plateau, which has kept price action muted to the downside since last week. Once the bullish breakout is behind us, expect Sol price to test the red descending trend line around $78 and, depending on the buy volume behind it, could pierce through that trend line. That break would be the key trigger for investors to get back in behind the price action and watch it quickly spiral higher toward $95.31 with the 55-day simple moving average, SMA, as a cap. Sol price set to pop 72% as bullish squeeze gets underway. Solana price is on its way to performing a classic bullish squeeze with higher lows and price action getting squashed against the top line at $58.84. Pressure is building, and bears will soon need to forfeit their positions and inadvertently join the buyers to close their short positions. With that move, demand on the buy side will quadruple and see a fierce shot higher in the price action. Sol price could go as far as $78 in that movie, and bulls would hit the red descending trend line. Depending on the risk on sentiment and if the dollar is retreating, Sol price would have plenty of tailwinds to break out of the downtrend that began in April and see massive inflow from investors awaiting a critical signal that the downtrend has come to an end. That would see a solid rally in Solana price toward $95.31, just below the 55-day SMA. As markets moved a lot yesterday, some assets are now trading at critical levels that could see a rejection. The same goes for both the dollar and Solana price, with that last one pressing on the $58.84 level and possibly seeing a rejection to the downside. Bears would see bulls fading and trigger a drop back toward $40. If some new negative headlines push markets back into winter mode, expect to see a nosedive move toward $18.66. Why Ethereum price at $600 seems more plausible than $3,000. Ethereum price has flipped bearish from a macro perspective after creating a second lower low at $1,700. Investors should be prepared for a worst-case scenario that puts ETH at $600. A 3-day candlestick close above $3,396 will invalidate the bearish thesis. Ethereum price is in a tough spot despite the recent crash and indicates that a further downtrend is on the cards. The case for a bullish trend will only be revived after ETH produces a higher high from a macro perspective. From a fundamental point of view, increasing competition has recently capped Ethereum blockchain upside, but user share dominance and further cycle improvements allow for high upside. Mixed views on Ethereum on State of Crypto report. With this regard, in a recent report on the 2022 State of Crypto, popular tech VC firm A16Z outlined its views on Ethereum and its leadership. The report by the Silicon Valley company states that users are willing to pay an average of $15 million in gas fees per day despite the massive number of competitor blockchains. Additionally, this A16Z report mentioned how this popularity is a double-edged sword as the Ethereum blockchain has always preferred decentralization over security, allowing other Layer 2 scaling solutions to siphon its user share with the allure of better performance and lower fees. Ethereum price remains bearish on a higher time frame. Ethereum price set an all-time high at $4,868 on November 10, 2021 after a 579% year-to-date gain. This impressive rally faced two major sell-offs. The first crash pushed ETH down by 55% and set a swing low at $2,160. The second leg knocked the smart contract token by 52% and set a lower low at $1,700. This development since the all-time high is a clear indication of a downtrend with distinctive lower highs and lower lows. Since this trend is occurring on a macro time frame, it indicates that ETH and larger crypto markets are in a bear market. For now, the Ethereum price is bouncing off the $1,730 support floor, which also happens to be the high volume node of the 2021 volume profile. While there is a pause from the sell-off, a failure to set a higher high could further trigger another crash that could shatter the $1,730 barrier. In such a case, ETH price could slide to the next stable barrier, $1,260, coinciding with 2021's second high volume node. This is the second most significant level that could serve as a potential reversal zone with the ability to trigger an uptrend. While an upswing from this level might be possible, what lies below this level is extremely critical and is the best zone for dollar cost averaging or buying spot ETH. Assuming sellers shatter the $1,260 barrier, the 2020 and 2021 volume profile shows that there is a massive gap extending from $911 to $595, termed the void. Within this area also lies the fair value gap, aka price inefficiency, that extends up to $661. Therefore, the confluence of these levels around $661 is where long-term investors could blindly accumulate ETH. This is because the risk of a sell-off around the levels mentioned is extremely low. Supporting this lower move in Ethereum price is the net unrealized profit/loss metric. This index is essentially the difference between ETH holders with relative unrealized profit and relative unrealized loss. Another way of understanding this metric is that it is the difference between the realized market capitalization and the actual market capitalization. The relative unrealized profit or loss is obtained by noting the difference between the unrealized spent transaction output, UTXO, and the value of the holdings at the current price level. As seen in the chart, the bottom for each cycle occurred when the NUPL dipped into negative territory. The 2018 and 2019 bear markets bottomed when the NUPL was between 0 to -1. Currently, the NUPL for Ethereum price is hovering around 0.19, which indicates that a further descent in price action is likely. Lastly, the market value to realized value, MVRV, Z-score for Ethereum also supports the idea of a steeper correction. This on-chain metric is used to assess when Ethereum is over/undervalued relative to its fair value. Based on historical data, the green band, extending from 0 to -0.61, is where ETH bottomed before in 2016 and where the altcoin is highly undervalued or at a discounted price. Likewise, the red band, extending from 7 to 8.5 is where historical tops are formed and is when the ETH is highly overpriced or at a premium. Therefore, a dip into the green box would be a buy signal and a move into the red box would present a sell signal. For Ethereum, the MVRV Z-score is hovering at 0.19, indicating that the price of the second largest cryptocurrency should dive deeper to signal buy. Interestingly, both the on-chain metrics are perfectly aligned with the technical outlook, which suggests a steeper correction still to go for the smart contract token. Despite the extremely bearish outlook for Ethereum price, it makes sense from a macro perspective. Moreover, Bitcoin price also reveals its pessimistic narrative, which aligns perfectly with ETH's future. If Ethereum price produces a 3-day candlestick close above $3,396, however, it will indicate a higher high from a macro perspective. This move would invalidate the bearish thesis and suggest the possibility of an uptrend to retest $4,000 or higher levels.